These green boxes represent periods of time where most strategies tend to work well. These red boxes represent periods of time where most strategies tend to fail. If you could simply just cut out these areas or periods of time from your trading, right, and only trade during these periods of time, you'll find a drastic improvement in your trading and in the quality of the signals your strategy presents. And you'll find that more often than not, your trades actually work out. So this is what we're going to be discussing in today's video, so stay tuned.
Pull the trigger.
How's it, traders, and welcome back to Paradigm Flip. Hope you're all doing well. In this video, we're going to be touching on market filters, right, and market filtering, okay? And we're not going to get too deep into it, right, but we're going to touch on the basics, right? And hopefully it's going to educate you and help you understand, especially for a lot of the new guys, right, how to trade your strategies or how to switch your strategies between market conditions, right? So if you look at the chart, we have two basic conditions, right? We have condition number one in the green box and condition number two in the red box, right? And it's quite clear that condition number one is very trendy and condition number two is very rangy, right? And we can see it here again. Now, most strategies tend to work when we have a trending market, right? When the market is moving, it's extending to somewhere, and there's a lot of momentum in the market, right? These are periods of times where you can actually trade multiple types of strategies that tend to work, right? You can trade your trend continuation strategies, you can trade your trend line break strategies, breakout strategies, you can trade support and resistance pullbacks, right? All sorts of good strategies that tend to fail, right? In these kinds of environments, right? They work in these environments, okay? And obviously we want to be doing this on a smaller time frame, so when we are in this environment, right, we obviously want to be going in or dialing down on a lower time frame and looking for your trade setups within this market environment, okay? And what we generally are trying to do is we are trying to cut out this rubbish from your trading, right? We are trying to cut out this from your strategy, right? In this market environment, right, your strategies are going to perform poorly, okay, and that's going to adversely affect your profit and loss, and the quality of your signals in this environment, right, are going to be terrible, right? And the market tends to stay in a rangy environment more often than not, so it's very easy for traders to get caught up trading within this environment, right? And rather than waiting for a clear trend to develop, right, and trading within that environment, right? But if we could simply cut out this noise, right, from your trading, right, and only stick to trading in this environment, and stop trading when we are in this environment, right, we'll see a great difference. You'll see a great difference in your trading performance, okay? And I know a lot of traders hate indicators, right? And especially the more seasoned ones, right? These days there's a lot being said against indicators, and fair and fine, right? Each has their own style of trading, right? And I'm not here to judge and criticize anyone. However, don't be fooled and think that all indicators are bad, right? I'm not saying all indicators are good, right? But not all of them are bad either, right? And indicators can help you define market environments, right? And that's what we're going to be using indicators for, right? To filter out the market environment, right? So it can tell us basically when to start trading our strategy and when to stop trading our strategy, right? And this is very important for a lot of the new guys also coming in the market, right? Don't fall victim to the trap that you don't need any indicators and you can see everything with your eye, right? But where there are traders that can do that, right? And some might find that easy, right? A lot of traders can't, right? So don't be scared to put indicators on your chart. It's not a sin, okay? And what we're going to be looking at right here is we're going to have firstly moving averages on our chart, right? We have a long and a short period moving average, right? And then we are going to have a MACD, right? And the settings of the MACD are the same settings on the moving averages, on the moving averages, right? And one thing we can see right off the bat is that when the MACD is below the zero line, right? We are in a downtrend, right? And when we have crossed, when the two averages have crossed, when the short has crossed the long, right? It also confirms that we are in a downtrend, right? In this kind of environment, we are gonna assume, right? Once we get this cross, we are gonna assume, right, that the trend is going to continue lower and the momentum is going to continue to the downside, right, until we get a cross of the MACD, right? So what the MACD is simply telling us is telling us the difference between the two moving averages, right? So when the short period moving average is extending away from the long period moving average, right, we got the MACD line going down, and we got a signal line here to indicate a cutoff point and a starting point, right? So as long as this MACD is dropping, right, this indicates that the short period average is moving sharply to the downside and we have momentum to the downside. And whenever this momentum is waning, as you can see in this period where we have a change in market conditions, right, where we now begin to get a range, right, we can see that the difference between the moving averages, right, where it was expanding in this region, right, we can see the difference between the two moving averages is contracting, right, and that will show up on the MACD histogram here, right, and we get a cross of the signal line, and that basically tells us, right, that we are now in a possible rangy environment, and this is where you now want to cut off your trading strategy, okay, and you only basically want to be trading in this environment, right, as long as the MACD is below its signal line, right, and trending to the downside or to the upside, right, that is the environment that you are looking for, right, and also based on the direction of the EMA crosses on your chart, right, you want to be trading in the direction of the two EMAs, obviously, okay, and that basically is going to give you your market environment, right, and you can have a look at this idea as well, right, you can see that we crossover, right, at this point, right, and this tells us that the MACD is trending to the downside, and you can see that the short EMA is expanding away from the long-term EMA, right. All throughout this area we do get a little hiccup here, but we resume at this point, right, and this all cuts off around this area here, right. So you would be trading your trend strategies or your momentum based strategies or your support and resistance, your flag patterns, your trend line breakout and retest patterns, all those kind of patterns and strategies tend to work very well in these environments, right? And they don't perform well in these environments, right? And you can see that once we start to narrow, once the two averages, right, start to narrow, right, that indicates that the market is going into a range, right? And you can see we know that from the point we cross over here, right? And throughout this period here, we are not trading our strategies. And in fact, if you do have a strategy that can take advantage of ranges, you can actually switch your strategy to take advantage of mean reversion trades, right, in these environments, right? Leaning towards more of buying low and selling high, okay, and those will tend to work more well in these ranging environments, right? So having said that, we can actually just go on a lower time frame and have a look at these areas, right, and have a look at some of the setups that occur in these areas, right, and we can simply go to a 30-minute chart, right? So we are here on a 30-minute chart and we are looking at those higher time frame zones that we have drawn, and I just want to put these session breaks on, right, and you'll know that most of these periods last for a couple of days, and these ranges tend to last for more days, right? Because the market tends to stay in a range for much longer, right? And you'll notice if we just have a look at these areas, you'll notice that whenever we get these pullbacks, right? You can draw your trend lines over these areas. You can draw your support and resistance, right? In these phases, in these boxes, right? You can draw all that up, right? Let me just zoom into this box. right? You can see in this area here, right? We had a flag there that broke out, right? And that was successful. We had another flag in this area here, right? You can see that was a successful flag as well, right? We had this pullback, right? And the trend line broke at this point here, right? And that was also another successful continuation to the downside. Okay, we had a pullback and a flag in this region here. Okay, that one was short-lived and was not successful, right? We had this trend coming in here on this pullback, right? We pulled back deep, we pulled back into a resistance area, right? A resistance zone here, okay? And we found resistance at that area. You can see the price broke out of the trend line, we pulled back and we retested and we traded lower, right? So those are also successful in that location as well, right? And these are very simple strategies that tend to work, right, when the market is moving or trending in a in a direction, right? And you'll find that in this balance area, right, those strategies now fail, right? This is where you'll get chopped up, right? If you try and take a continuation to the upside or to the downside, it's not going to go very far. Okay, and we can go to the next green area in this example here, and you can see that, right, we get some pullbacks. The first initial impulse leg came from this area here, right, and you can see we had this pullback, right? We had a break, we had a retest. Okay, we traded lower, right? We had a support area, a resistance area, right? We pulled back, we dropped, we pulled back again, right? We dropped, right? If you want to draw a trend line over that, you can see we break out at this area here. We have a continuation lower from there, okay? And then we pull back all the way to this resistance area again. We can draw another trend line over it, okay? You can see we break out, we get some sort of retest, and we get a move lower, right? And that continues lower, and even on a lower time frame, right, you have many different pullbacks and flag patterns that you could take advantage of, right, in the direction of the larger trend, right? And that should help you as a trader filter out areas or periods of time where you are most likely going to be more successful, right? Because if you trade these setups in this area, right, these are not going to be very profitable areas for you to trade in, right? All those strategies, right, as simple as they may seem, right, tend to work very well in trending environments, right? These are areas where you'll be able to make money, right, more often than not using those strategies, right, as compared to this environment, right? So just simply changing your strategy, right, or only trading your strategies, all right, in a environment that matches your in a market condition that matches your strategy, right, has a great impact on its performance and also the quality of the signals that are produced, right? And that's going to obviously impact your trading in a positive way. Now, I hope this video added value to you, right? And if it did, please hit the like button. Please comment your thoughts below, right? Please subscribe and hit the notification bell to be notified for future videos. And until next time, I'll catch you all on the flip side.